Hello and welcome to today's NinjaTrader ecosystem event, Kase Bars for NinjaTrader. My name is Patrick Hodges and I'm a NinjaTrader ecosystem representative. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage using the phone number or the email you see on screen. If you are new to NinjaTrader, please make sure to sign up for a free NinjaTrader account, which includes access to 14 days of complimentary real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. You can create your free account by following the link on the screen and then clicking the Get Started option under the Welcome section. Before I turn the mic over to Dean, it's important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. If you'd like more information or for a copy of the full CFTC risk disclosure, please follow the link I'm entering into the room. Please remember that these training sessions are not a solicitation nor a recommendation. Excuse me. Skip slides there. Let me try that again. Please remember that these training sessions are not a solicitation nor a recommendation, but simply educational in nature. I want to thank everybody for joining us today. And without further ado, it's my pleasure to welcome to the NinjaTrader webinar room, Dean Rogers of Kase and Company.
All right, perfect. Thank you, Patrick. I appreciate the introduction and, welcome everybody. Thank you for joining us for the Kase Bars on NinjaTrader. Again, thank you all for joining us today. My name is Dean Rogers. I'm the president of Kase and Company. I've been working with, so many of you may know Kase and Company was founded by Cynthia Kase back in 1992. I've been working with her for 25 years now. I took over the company last year and moving it forward. She's still around. And so, it's, if you ever have any questions for her, you can always reach out to me and I can get those to her. But anyway, let's go ahead and get started with today's presentation. So as Patrick just went through, trading is obviously very risky. You never want to risk more than you can lose. If you want to read through the full disclaimer here, it's up for you. But definitely, managing risk is a very important part of trading. In my opinion, and in most traders' opinion, it's the most important part of trading. So what are we going to go over today? So today I am officially introducing the Kase Bars on NinjaTrader. Kase Bars are a custom bar type that have been around for quite some time. Ms. Kase originally introduced them as universal bars in her book, Trading with the Odds, which was published in the mid-90s. I think it was like 95 or 96. And then later we put them onto another platform and called them Kase Bars in 2005, 2006, right around that area. And then we have officially been able to now put them onto the NinjaTrader platform, and we're offering the Kase Bars for free. So our custom bar types, we have two different custom bar types on NinjaTrader. One that we've had on there since about 2015 is the X-Range bars. Some of you may be familiar with those. And then the other bar type is the Kase Bars, which we are now, again, offering for free on NinjaTrader. And at the end of the presentation, I will give you a link so that you can go and request to download the Kase Bars and the X-Range bars for free. We'll send you the Ninja script and instructions for installing those and getting started with those. We're also going to talk about, why should we use Kase Bars? What is the advantage of using Kase Bars? So those are some of the topics that we'll cover. And then the last thing, which is always everyone's favorite topic, or at least it's the number one question that I get, is what is the best bar length to use? Not just with Kase Bars, but with any bar length. And so, or any bar type. So we'll definitely go through a little bit of choosing a bar length. It's a much more detailed concept and topic, but we've done actually, I think last year, or maybe about 6 months ago, we did another NinjaTrader webinar with the NinjaTrader ecosystem where we discussed choosing a bar length based upon risk appetite and trading style. So that's definitely something that if you haven't gotten to see it, I would recommend watching it. So what are the Kase bars? So Kase bars are based upon true range, and what they do is they create equal true range bars. It's a pretty simple concept. So let's just do a real quick refresher on true range. For those of you that aren't familiar, it's a concept that, as far as I know, was introduced by Wells Wilder in the mid-70s in his book, New Concepts in Technical Trading Systems. The true range is basically the maximum of the high minus the low of the current bar, the absolute value of the high minus the previous close, or the absolute value of the low minus the previous close. So it's a basic measure of volatility as bars change between bar to bar. And so we can look at a couple of examples here. So the true range of bar A to B. So we have bar A here, bar B. So if we look at the high-low range of bar B, that's 39 minus 33, which is 6 points. If we look at the high minus the previous close, or 39 minus 32, that's going to be 7 points. Or the low minus the previous close, which is 33 to 32, which is only 1 point. So the true range of bar B to A would be 7. If we look at this gap down from bar C to D, if we're looking at the true range, so the high-low range of bar D is 8, so 36 minus 28. The true range of, or excuse me, the high minus the previous close range, 36, so the absolute value of 36 minus 41 is 5, or the previous close, the low to the previous close is a distance of 13 points. So in that case, the true range of that bar C to D is going to be 13. Again, just a very quick little refresher on true range for those that aren't familiar with it or don't use a lot. True range is a valuable and very useful concept in technical analysis. And we use it in a lot of our trading indicators, and we obviously use it in the Kase bars, which we're discussing today. So the Kase bars, again, the idea is we're creating equal true range bars. So the bars themselves are based upon a true range target. So the target range, which we can see the inputs for the Kase bars over here on the right. So we have the target range is what we set to set the size of the Kase bar. Just like if we're looking at a 5-minute chart, we would set a target range of 5. If we're looking at a 3,000 tick bar chart, we set the range to 3,000 for the tick bar chart. In this case, we're setting the range based upon the minimum tick size of the underlying instrument. So this is the only part that might be a little bit conceptually tricky. I think it's pretty simple and straightforward. I decided to go with programming it this way because it was a little bit easier in the underlying code than trying to figure out the minimum tick size and adjusting everything. So what we did here is, if we're using an instrument like crude oil, so CL, the minimum tick size is a penny. So a range of 25 is going to give us a true range bar or a Kase bar of 25 cents. So each of the bars being plotted on the chart are going to be about 25 cents in true range. So that's not necessarily the high-low range always, like we just looked at a second ago. It might be, the high to the previous close or whatever else. But all of the bars are going to have about a 25-cent true range to them, depending upon how we're building the bars. And I'll get into that in just a second. If we're using something like natural gas, if we're charting natural gas, which has a tick size of 0.001, so 1/100th of a cent, a target range of 25 is going to be 2.5 cents. If we're looking at something like the E-mini S&P 500, where it's a 1/4 point minimum tick size, 25 is going to give us $6.25. So each of the bars being plotted is going to have a true range of around $6.25. The mini Dow is $1, is the minimum tick size. So 25 is going to be a $25 true range target. And with Apple, or just about any other equity, US equity at least, the minimum tick size is a penny. So 25 is going to give us 25 cents. So that's the target range. The target range is the most important input. That's going to set the size of your bar. But the other inputs that we have here are the base period type. So the base period type, there's several options: tick, minute, day, volume, seconds. I recommend, if you can, tick. Tick is going to give you the most accurate Kase bars. If you can't use tick, or if you don't have enough historical data using tick, then the other option that I recommend is using minute bars, 1-minute bars particularly. It's the closest that we can get, or the smallest bar length that we can typically get, where we have the most historical data. And so the base period type, we can either set to tick or minute or whatever else you choose, but I recommend tick or minute. And the base period value is going to be the number of ticks if we choose tick as a base period type, so 1 tick or 1 minute. We could use 5-minute bars if we wanted to, or we could use 5-tick bars. Again, we want to try to go to the smallest size bar available. 1 tick is optimal, but a lot of times we don't have a lot of historical data with tick charts. Therefore, the second best option, in my opinion, is going to be the 1-minute bar. Just a couple of notes here about the Kase bars. The Kase bars they're only built using true data, so real data. We don't insert any fictitious data. We don't fill gaps. We don't use any ghost data. Nothing that's being plotted on the chart is fake data. We do allow for gaps. Gaps are important in our opinion. They can tell us a lot about a chart or what's going on when we have turning points or maybe measuring gaps. We have exhaustion gaps, breakaway gaps, all of those different types of things that we like to look at to tell us, hey, is this move up becoming exhausted? We might have an exhaustion gap higher and then the market turns down, so on and so forth. So basically, we allow for gaps. And then we don't force any of the high, the lows, the opens, or the closes. What we see on the chart is, again, real data. There is a little bit, when we're using 1-minute data, the open of the bar can be slightly different than what the true open is. And that's just because of the time delay that we have when we're using the 1-minute chart. So for instance, if we're building the chart, and I'll get into how the chart is built in here in just a second, but as we're building the bars and we're feeding in that 1-minute data, we have to look to see, is that 1-minute data or that 1-minute bar that's being fed into the current Kase bar, is it going to make that bar meet or exceed the true range target? If it does, that 1-minute bar is going to create a new bar. And so the open of that bar, that new bar, might be delayed by upwards of a minute. So I know it's a little bit hard to see here, but what we have here are the Kase bars plotted as either using 1-tick data or 1-minute data. So the target range on these are around 35 cents. And the reason that I showed this is whenever we're using the 1-tick data, we can be very accurate because as each tick is being fed into the current Kase bar. So let's say we're using, in this case, a 35-cent Kase bar on crude oil. As each tick is being fed in, we look to see, does that tick meet or exceed the target range? And how close to that target range is it? If it exceeds the target range, that tick will form a new bar. So as soon as that tick is making the true range of the current bar 36 cents, it's going to create a new bar. So we always, almost always, I can't say always, but almost always have a true range of exactly 35 cents for all of the bars, or whatever our target range is when we're using 1-tick. That's why it's the most accurate, and ideally it's what we would want to use. However, if we want more historical data, because typically we don't get a lot of historical data using tick data, then the other option, like I said earlier, is to use 1-minute data. And in this situation, again, we're using 35 cents, but you can see that the true range target varies a little bit, because as that minute bar, that 1-minute bar, is being fed into the current Kase bar, it's going to plot on that current Kase bar. But once that 1-minute bar makes the current true range of the current Kase bar exceed that 35-cent range, it's going to start a new bar. The next minute's going to start a new bar. So in this case, you can end up with a true range of the bar that's slightly higher than 35 cents or your target range. It's going to be as close as we can get it, but that's just the limitation of using the 1-minute bar, because we can't break that 1-minute bar up into 2 different bars. So let's talk about why we should use Kase bars. So the first thing that we do is when we're looking at Kase bars, one of the things that we're doing with Kase bars, and this is true of a lot of custom bar types that are out there nowadays, But the case bars, address this just equally as well. And in our opinion, maybe sometimes better because we never use any fake data. We allow for gaps, all of that different stuff that we just talked about. But on the left here, we see as of June 10th is when I made this slide. It was a 15-minute chart with the true range. So I was using probably a 30-bar true range here. And we can see a lot of variation. It varies from around, 5 cents all the way up to about 40 cents in true range. So there's a lot of variation from bar to bar in the true range. However, if we use a target range, in this case of 20 cents, all of our bars have a true range of 20 cents. Therefore, the volatility on the chart is more evenly distributed. So if we're thinking it in terms of a bell curve, it's going to be a much more narrow bell curve or distribution of volatility. It's going to be a witch's hat, basically, instead of a wider bell curve with more variation and more variability in the true range. So what does that mean for us? Well, what it means for us is, generally speaking, whenever we plot a indicator on a chart, our indicator is going to be getting more data sooner, or in some cases when the market goes flat, like in the overnight sessions with commodities where there's not a lot of trading activity, it's going to make all of those bars into one bar instead of a bunch of different bars. So if we're looking at, let's say, in this case, a 15-minute chart, and I just very simply put an 8 and 21 period simple moving average on there just to look at crossovers. So the idea would be when the 8 period crosses above the 21 period, we would be long. When it goes below the 21 period, we would be short. Well, during periods of time of low volatility, like over here, we might get some whipsaws. So we have, the fast moving average, which is red. So the 8 period crossing above the 21, then crossing below, then crossing back above and crossing below, because there's not a lot of variation at that point in the true range. However, when we start to see breakout moves, we start to see larger bars. Well, as we get those larger bars, we're not getting as much data being fed into our trading indicator. So if we have one bar that's like, let's say, $1 in size, and we're using, that one bar is going to be one bar that's fed into our trading indicator. However, if we're using a 20-cent target range on the case bar, that's going to be 5 bars that are being fed into our trading indicator. So our trading indicator can more quickly adjust to that $1 move because it has 5 bars versus just one giant bar. So in this case, with the 15-minute chart, we can see periods, especially when we get into consolidation and lower periods of volatility, we can see a lot of crossovers and whipsaw type trades. However, if we plot a similar case bar chart, and I'll talk about why it's similar here in a little while, but in this case, we're using a 20-cent case bar, which was basically the equivalent true range target of a 15-minute chart for crude oil on that day. We can see it's much smoother. So down here during this period where it was consolidating, all of those small bars were basically, squished up into 1 or 2 bars here and there, instead of just a bunch of little bars that caused all those crossovers and all those whipsaws. And then when we had larger moves up, we can see that the distribution of that volatility is more even. We get more bars during those larger moves up. So again, our indicator can be more reactive to changes in the market price. In this case, we still got a little bit of a whipsaw. It happens to the best of us. But instead of having 3 different, or really, many more, 3 periods of whipsaws like we saw on the 15-minute chart, we only had one whipsaw trade here on the case bar. So that's just a very simple example of one of the reasons why we would choose to use the case bars is the distribution of volatility. It makes things more even. One of the other great things, and I'll show examples of this here in a little bit, is because of that even distribution of volatility, our trailing stops, especially if we're using something like we use with our case statware trading indicators, our dev stops, we use standard deviations of the true range or of the average true range. And so in that case, we know that our risk tolerance or our risk amount for our stop is always going to be about the same versus a time bar where it varies a lot. So let's talk about choosing a bar length. We can either do it using the average true range or based on our trading style or risk appetite. There's other ways to choose a case bar length. These are the two ways that I typically tell people to do it. But there's no reason you can't go in there, just like you chose to use a 5-minute chart. There's no reason you can't go in there and say, hey, I'm going to use a 15-point target range or a 25-cent case bar or whatever it might be. But these are two ways that I think will help get you started with choosing a bar length that's going to suit your trading style and your risk appetite. So the first way is using a target range, or using the average true range, excuse me, to find the target range. So what we're doing here is we're going to mimic the average true range, or the ATR, of a time bar chart. So if I'm typically using a 15-minute chart or a 3,000 tick chart or whatever it may be, then we can plot the average true range indicator. I usually plot a 30-period ATR, or average true range indicator, which is built into NinjaTrader automatically. And then I look at what that target range, I kind of look for the midpoint. And this isn't like super scientific. I'm basically just eyeballing where is the midpoint of the ATR for the past 10 trading days. So I'm going to basically set up a chart. If I'm typically using a 15-minute chart and I want to mimic that 15-minute chart, then what I do is I plot the 15-minute chart, I plot a 30-day ATR on there, and then I look for the midpoint of the ATR over the last 10 days. That would be my target range. The advantages of this, it's very simple, it's very quick, it's very easy. You have that chart set up, it could just be one of your charts in NinjaTrader on your screen. You have it ready to go. You look at that and you can see where that ATR is. That's the target range that you're going to be using. So the other advantage of this, and when we first launched the case bars, this was one of the most common things that people ask us about is like, okay, I typically trade a 5-minute chart or a 60-minute chart. What target range should I use? Well, this is the easiest way. It gives you an idea that, okay, you are still trading a chart that's around the same size or risk amount as the chart that you would typically trade with a time bar or volume chart or tick volume or whatever it might be. The disadvantage is it takes a little bit of time just to set it up. Once you get it set up, it's there, especially if you just keep that chart up, as one of your charts on your screen. But the other disadvantage that I see with this is that the ATR is going to change over time. So in that situation, from a day-to-day basis, as market conditions change, the true range is going to change, and therefore the average true range is going to change over time. So what I recommend is once a week, say Monday morning, when you are getting your setup for the week for trading, you look at that target range or that ATR chart, and you look at that midpoint of the ATR over the last 10 days. That's going to be your target range for the week. And so you can do it every day if you want to. You can adjust that target range manually every day. I typically find in this situation that doing it about once a week is perfectly fine. So let's look at an example of how we would do that. So this is a natural gas 60-minute chart with the average true range of 30-bar ATR applied. So you can see that there's a lot of variation in the true range. It ranges from around 2.5 cents all the way up to almost 4 cents. If we kind of eyeball the midpoint or the median of the average true range over the last 10 days, it's going to be right around 3 cents. So to mimic a 60-minute chart using the case bar, the target range that we would use is going to be 30, which is 3 cents for natural gas. So here's that chart applied with a 3-cent or 30-point case bar chart. Now, one of the things that you'll notice here is most of the time, it's very close to being exactly 3 cents because I'm using a 1-tick case bar here. So I'm building the case bars using 1-tick data. So it's almost always going to be exactly 3 cents. However, there are times when we get a gap down here. And again, this is an important point. We like to show those gaps. So when we got that gap down, told us it was looking like a breakaway gap to the downside. We had the market moving up. We get a breakaway gap to the downside. That gap was filled. The market continued to move down. So in that instance, because of that gap, the true range for that one bar was more than 3 cents. So that's why I was saying I can't always say that it's going to be exactly 3 cents. There are times where it might be a little bit more, but that's usually because of a gap. The other way that we can build the case bars or choose a bar length is based upon our risk appetite or our trading style. So, as far as the trading style, if we're scalping, we usually use a smaller target range. If we're swing trading or trend trading, it's going to be a mid-sized target range. Position trading is a larger target range. That's all really dependent upon your risk appetite, in my opinion. When I'm choosing bar lengths and when I'm teaching clients on how to choose a bar length, most of the time it's based upon what is their risk appetite, what is their trading style, how much are they willing to lose or risk per trade. And so that's something that's important to me. Again, there's a whole other webinar that I did uh, last year or several months ago with NinjaTrader on this. So I definitely would recommend looking that up and watching it if you're interested in this topic, because I think it's a very important one. So this is based upon the idea that we're going to use a trailing stop when we're trading. I believe that we should all be using trailing stops. You never know when the market's going to turn against you, and you want to make sure that you get out and don't risk too much. We recommend as a trailing stop that you use standard deviations of the ATR or the average true range. So in our Kase StatWare trading indicator package that's available on NinjaTrader or our Kase X indicator, we use call it the Kase Dev Stops, and there's another indicator that goes with it called Rev Amounts that will tell us exactly how much we're risking at each stop level. The advantages of doing it this way is that it's a one-time setup. Unless our risk appetite changes over time, and we want to take more or less risk, dependent upon our account size or our trading style is changing or the market conditions are changing. But as long as our risk appetite is static, then this is just a one-time setup. And in this situation, our trade risk is going to be less variable. Now, there's always trade risk, always. But there's going to be less variability in our trade risk due to the less variations in the true range because we're using the Kase bars, which are built using true range. The disadvantage of this approach, it takes a little bit more time initially to find that target range that's going to give us the risk amount that we're looking for. So to put this into a practical example here, now in this case, I'm using the Kase bars again. I'm using a 25-cent Kase bar. I have the Kase Rev Amounts indicator plotted here at the bottom of the screen. So what this indicator shows us is the median of the ATR over the last 30 bars, a 1 standard deviation move of the ATR over the last 30 bars, a 2.2 standard deviation move, and a 3.6 standard deviation move. Now, by default, we usually use what we call Dev 3 or this reversal 3 level, which is the 3.6 standard deviations of the ATR. It's a statistically significant level. Typically, we know that if the market turns and has a 3.6 standard deviation move of the ATR over the last 30 bars, there's a very small probability that that trade is going to continue in our favor. Therefore, we get out. So that is our default stop level. That is the maximum amount of risk that we're taking for that trade. So in this situation, what we would do by plotting the rev amounts or those standard deviations of the ATR on our chart, we can see that our maximum risk is right around 75 cents. So as long as I'm willing to risk 75 cents or less, this 25-cent Kase bar is going to be a good chart for me. Now, if I only wanted to risk 50 cents per contract or 50 cents in total, I would need to go to a smaller Kase bar length. I might need to go to a 20-cent or a 15-cent Kase bar. If I was willing to risk more, if I was willing to risk $1.50 per contract or $1.50 total per contract, then I could go to a longer bar length, maybe a 30 or a 35 cent or a 40 cent. So this is where it takes a little bit of time to hone in, but once we hone that in, that's going to be the chart that we continually use because, again, we're not going to have to change our target range because the case bars are built based upon the true range and are, in this case, because we're using standard deviations of the true range for our stop level, our stop is always going to be right around no more than 75 cents of risk on a 25-cent case bar chart. Therefore, I know I can always use this chart. And as you know, when I place that stop, it's not going to be anything more than that 25 cent, or excuse me, that 75 cents. So start wrapping this thing up. If you have questions, please start to put those. I do see one question. We can address that here in a second. But again, we are offering the case bars for free on NinjaTrader now. And so the case bars and the X-Range bars are free for all NinjaTrader users. You can go to the link on the screen, use the QR code. There's a form at the top of the page, but you're going to want to go to the bottom of the page to fill out the form at the bottom of the page to get the case bars. The form at the top of the page, and I'll go back, you're going to see a button that says get a free trial. That's if you want to take a trial of our case statware, our case X indicators on NinjaTrader, or any of our other services. But again, you can go to this link, get the case bars for free. And we'll send you the instructions on loading the case bar NinjaScript, as well as there's a document, a PDF that we send along with it, or to download, that gives you some basic ideas of the inputs and explains things in a little bit more detail. Finally, just as an offering here, aside from giving away the case bars for free and the X-Range bars for free now on NinjaTrader, if you are interested in looking at our trading software that's available on NinjaTrader, we have our Case Statware and our Case X trading indicator packages. We are going to offer a special. We give a 30-day free trial. So as soon as you install that on your NinjaTrader system or charting package, it's going to start a 30-day trial. It's free. At the end of that 30 days, if you decide that you want to subscribe, it's either $195 a month, or we're going to offer a special discount for a 13-month subscription at $1,895 through October 31st of 2025. All of our contact information is there. Please follow us on social media. I put out stuff about the crude oil, natural gas, and metals markets all the time on our social media channels. We also talk a little bit about our trading indicators from time to time on there. And can answer any questions that you might have. So let's get to questions here. So the first question was, what is the true range target for NQ? So yeah, 25, because it's if I'm not mistaken, off the top of my head, I think it's a quarter. The minimum tick size is a quarter point on NQ. So 25 target range would be $6.25. So if it's 35, it's going to be what, 35 times 25 cents. So, the target range is going to be dependent upon the minimum tick size. You're basically looking at, that's the number of ticks that it's going to take to meet that target range. The second question that we had from Scott, let's see, can indicators be used in Strategy Builder to automate trades? And what do they cost? I'm guessing to lease. So our indicators, so the case bars can be used in the Strategy Builder. They can be used on automated trade systems. Our trading indicators, Case Statware, that package can actually be used. We actually have public data members that you can access to get the signals or the values of the underlying indicators. And those can be used in the Strategy Builder, or I haven't tested them, or I haven't used them in the Strategy Builder, but you can build custom NinjaScripts with them. So you can go in, create a NinjaScript trading strategy. I'm actually working on one right now. It's what I was doing right before I got on this on the webinar today. Is I'm using our Statware trading indicators and a custom NinjaScript strategy to build trading systems that we test in the strategy tester on NinjaTrader. Hope that answers both of those questions. Do we have any other questions about the case bars, about the trading indicators, or anything else? So the Case Peak Oscillator is one of our trading indicators that's included in the Case Statware package. So the Case Peak Oscillator, there are other, I didn't talk about any of our trading indicators today because this was focused on the Case Bars. But there are other NinjaTrader webinars that I've done in the past, several, in fact, that you can look at the Case Peak Oscillator, and I go into depth on it. Just to give you an idea, the Case Peak Oscillator is a momentum indicator, very similar to something like the RSI or MACD. It's looking at the rate of change of price over time. What makes it unique is we use a variable look-back length. So the look-back length is not fixed. It's something that you can actually, it will adjust to the volatility over time. And we typically use the Case Peak Oscillator. It's part of our entry system, but it's also, we use it as a trade exit tool. So we use it to find divergences, which are automatically drawn on the chart, and overbought, oversold signals, which we call peak outs, to exit trades. No, these indicators are not automatically in NinjaTrader. So the Case bars, the X range bars, Case Statware, so all of our trading indicators like Case Peak Oscillator, KCD, Case Easy Entry System, the rev amounts that I showed, the dev stops, those are all an add-on package, a third-party add-on package to NinjaTrader. So you can go to our website for the Case bars and the X range bars. If you go to this website or this URL, you can download or request to download the Case bars or X range bars, our custom bar types, for free and install them into NinjaTrader. And then if you press this get a free trial button on our website, which our website is www.caseco.com. Yeah, I have it on there. And you hit that free trial button, you can request a trial of the Case Statware or Case X on NinjaTrader. So if you have the Case PO, I mean, Don, so if you have the Case PO, oh, Don, you and I talked this morning. We may need to have you send us if you've had a trial in the past, then you will have to send us your unique ID. And so I sent you the instructions on sending the unique ID this morning in an email. And that we'll have to put you in and permission you so that you can actually look at the Case PO. So for those of you, what we're talking about there is if you take a trial, if you've never had a trial of Case Statware or Case X, and you request a trial, when you download and install the Ninja script into NinjaTrader, it will automatically set you up with a 30-day trial. However, if you had a trial before, or if you've subscribed to Case Statware before and you're trying it out again, then we have to get your unique ID to permission you. And there's instructions to do that we send you. Any other questions or comments regarding the Case bars or anything else? What I will say is the Case bars, I mean, there's a lot of different bar types out there these days, and they're all great. There's a lot of great stuff out there. And, I love the fact that, we have all these different types of bars that smooth volatility and do all kinds of great things. But, I always tell traders that I work with, especially those that I see that are still using time-based bars or volume-based bars or tick volume bars, do yourself a favor, try out the Case bars, try out the X range bars, even the range bars that are built into NinjaTrader or Renko or Kage or any of these custom bar types. And I think that you're going to find that they make a big difference in your trading indicators. That's the biggest thing that I can say is, there's nothing that's, super unique or crazy, that's happening with the Case bars. It's just plotting data. That's all we're doing. We're plotting data, but we're plotting data in a way that makes it very useful for your indicators. your indicators get a lot more information much more quickly, or it filters out information when the market's, sideways or very flat, that just really doesn't, can slow your indicators down. Excellent, Philip. I'm glad. I'm glad to hear that you're using the X-range bars. I think you'll like the Kase bars as well. They're very similar, very similar. Let's see. I can try to bring up. So we have about 4 minutes. So let me see if I can bring up a chart here. Where's my mouse? Let's see. Well, here's some of those charts that we were just looking at a minute ago. It's a 15-minute chart. Here's the 35-cent chart. So here's the Kase bar. I mean, we'd shown this chart earlier. Just, in a, it was back here when we showed it, earlier in the day, or gosh, it was probably even further than that, because I made these slides, just over a month ago. But yeah, I mean, here's the Kase bars. This is a 35-cent Kase bar on the crude oil. We can look at so if we wanted to look at something different, let's say. So if we use a target range 25 with tick, we're looking at E-mini, so that's going to be about a $6.25 bar. Might take a second for this to load because it's tick data. See how many dates back I had. Should switch this up to. You'll notice that, the tick bar, when we're using one tick, takes a little while to build. If you want to use minute, it can be a little bit faster. A lot faster. So here's the E-mini. Give it some more data. Which numbers seem confusing? If you're talking about the target range, I mean, you're putting in the minimum number of ticks. So, if you want a $6.25 Kase bar on the E-mini, then you would use a target range of 25. Yeah, so the target range, exactly. I mean, there may be a way. I'll have to look and see. When I created the Kase bars, I didn't find a way, but there may now be a way with some of the improvements that have made it, or updates that have been made, to get the minimum tick size in the code. In which case we can maybe put an option in there to put in, the exact size of the bar that you want, like a $6.25 bar or a 25-cent bar, instead of using the minimum number of ticks. But for right now, in the current version that we have, it's going to be the number of ticks that it would take to create that bar size. Well, I think we are out of time unless there's any last second questions. I'd like to thank you all for attending today. I really appreciate it. Thank you to NinjaTrader Ecosystem and Patrick and everyone over there. Always wonderful to work with you guys, with all of you. And, we appreciate the opportunity to get in front of all of you and introduce our case bars on NinjaTrader.
All right, well, thank you again, Dean. Very much appreciated. Thanks for taking the time to share all that information with us here today.
Absolutely. Thank you again.
All right. Now, everyone in attendance here today will receive an on-demand recording of today's event. So keep an eye out for that email. If you enjoyed today's session, we'll hope you'll join us for future webinars. Follow us on social media for alerts about upcoming events and other NinjaTrader ecosystem news. I'd like to remind everyone that the information provided here today was that of Kase and Company, Inc., and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us here at NinjaTrader Ecosystem.